All right. Awesome. Karl, thank you so much for coming to join me today. How's it going?
Yeah. Oh, it's going well, man. I appreciate you having me on. Excited. Last time we talked a ton about commercial real estate, fitness, and of course, today is no different. Got in my 6.5 miles, despite it being 20 degrees outside today. It was brutal.
Jeez. Yeah, that doesn't sound fun at all. I got my workout in as well. Kept it light though this morning. Well, just for, everybody at home or the listeners will say, why don't you just give us a brief overview of who you are and what you do?
Sure. So up in the Northwest, based in Seattle, Washington, and I am a multifamily operator. So buy, operate, property manage apartment complexes up here in the Washington State space. Also developing single family and some smaller multifamily properties, fourplexes, fiveplexes, things of that nature, and doing what I can to take advantage and understand the zoning laws, so that way we can build density.
Yeah. Well, were you born into this? How did you get into, the multifamily space?
Sure. So no, not born into it at all. At least not that I knew of when I started. Yeah, no. So I was in healthcare, business services. Spent about a decade in the strategy, chief of staff roles for a health tech company, and it was great. Loved the job, and realized that we wanted some additional control over our income. Started investing a little bit more actively outside of the traditional IRA space. Day trading was not the right avenue for me. Bought a couple small multifamily properties just as some residual income space. And here in Washington, quickly realized that I was going to run out of money at that trajectory without being able to do any kind of cash out refinances, and started flipping homes. Started flipping homes at the same time I had a kid. Terrible timing, but no regrets there, I guess. Quickly scaled up over the next 6 years, flipping homes, developing ground up construction, single family homes, moved into the townhome development space, did really well. Transitioned back over to long-term rentals when inflation was a little bit more of a sticky topic. I mean, we just had the CPI come out this morning, not great, not favorable for us. And just better understanding how CPI inflation data impacts the overall buying economy made me take that decision to get back into the long-term holds.
So you start off, you said in the healthcare consulting space.
Yeah, more or less.
Yeah. And I guess your story isn't necessarily that different from a lot of people that want to get out of corporate America. I mean, uh, why? I mean, you mentioned it was more freedom and income, but I guess why real estate and why not make a move into a different industry or things like that? I'm just
Sure.
curious.
Yeah, so I didn't have a whole lot of experience. I mean, I had done, I think at that point, 2 live-in flips, right? So just buy kind of a beater upper home, do some light remodeling, sell it a year or two later, and I got that initial bump and after the second time, that's when I was like, oh, this is pretty cool. Maybe I should do this a little bit more actively. Kind of didn't really think anything of it, and then picked that back up when my wife and I were talking about starting a family. And, real estate really was that kind of tight niche. I tried my hand at day trading stocks, just wasn't the right fit. I think one of the big impediments to me was the technology stack that was really necessary that real day traders were using, high compute power engines. And, that was at that time, $10,000 to $15,000 just to even get the software, let alone the hardware, to really be actively and successful in the day trading space. So didn't really touch that. I did it for probably about 3 months and then came to that realization. So I decided real estate was the space to try, and worked out really well. Has
Mhm.
been working out well.
I guess, have you been able to I want to ask about lessons that you've been able to take from the previous career and move those, into
Sure.
your new career. But I want to hear about your experience with flipping houses and the development and how you decided to transition into that as opposed to just the house hacking and things like that you started with.
Yeah. So to answer it backwards, certainly the reason why I jumped into the flipping and the development was just a lack of capital, lack of access to capital. right? I bought a couple small multifamily properties and they were generating decent cash returns, which is all well and good, but I was nowhere near getting to a point where it would offset my active earned income from my W-2 job. And at that point, it was, hey, maybe there is something to this, being able to step away from my corporate job and have this become a full-time job. And so that's where, again, I started layering on a couple flips, making $60,000 per flip. Nothing, not too shabby, nothing to write home about. But, again, stack 3 or 4 of those. And it was, at that point, was offsetting the W-2 income. I mean, it just felt like a natural fit. And then so just to circle back on the first question, chief of staff, really what I was responsible for in the business services was new client growth and expense reduction, right? So strategic initiatives where go and figure out where can we cut the fat, where can we trim operating expenses, increase efficiencies. And so, I think both of those tie really, really well into the real estate space, right? So how can we maximize new properties, right? Maximize revenue on new properties. How can we maximize revenue on existing properties? So that was a lot of the new client growth and then same store upselling. And then obviously on the cost cutting initiatives, right? From an apartment standpoint, 100% falls really clearly in line. How do we manage our expenses, repairs and maintenance? What are our biggest expense buckets and how do we, actively manage those? Really focusing on those two has been my carry forward and something that I continue to own to this day.
So what sort of technologies have you been able to implement to be more efficient and manage the costs?
Yeah, good question. So I don't know if you've heard of it. It's called Microsoft Excel. No, I'm kidding. Yeah. There's a few. So obviously from a tenant portal perspective, your standard kind of CRM, Appfolio, Buildium, a couple of those different options that we've used.
Which one do you prefer?
Ooh, good question. More of my portfolio is on Appfolio. I have more control over the Buildium, and I can't, say which one I prefer more holistically. I think that the reporting on the Appfolio is a little bit simpler, and I tend to prefer simple as opposed to complicated and sometimes turns out to be convoluted stuff. So right now, more of my portfolio is on the Appfolio side.
Oh, but you're running 2 different PMS systems?
Yep.
Is that chaotic?
Not entirely. No, not entirely. I mean, I would prefer to be under one, but, keeping in mind one of the PMS systems I've only been using for, let's call it 18 months.
I've heard from my clients. I heard like 10 years ago that Buildium was awesome. And I tried to use it and implement it. And I just had too many, like now I had too many things going on. So I never really got in and fully got it set up. But we have a lot of clients, especially those that we invest with, they use Appfolio. And I like the interface from that perspective. So
yeah, it definitely seems to be the incumbent. You're starting to see a bunch of these smaller organizations sprout up, offer something that seems a little bit more nimble, more agile, more customizable, so to speak. And, that was one of the reasons of trying out one of these other, what I would consider smaller operators or smaller tech platforms to see what else is out there in the market.
how many units are you up to now?
Always the answer is not enough. We're just over 100, so about 104,
That's
105.
That's awesome. And are you syndicating to raise the capital?
Yeah, so a combination, right? Syndication and a couple joint venture deals.
Nice. Do you have like scattered sites?
Trying to consolidate them. So I've got 3 markets: Seattle, Wenatchee, and Spokane, Western, Central, and Eastern Washington. So I would certainly define that as pretty scattered at this point.
My questions are pointed because I just had my friend Guillermo on yesterday, actually, and he has a company called Iris CX. And I haven't seen the platform in action, but basically it is to help make your maintenance professionals more efficient at what they're
Sure.
doing. So it might be something I can introduce you guys offline.
I love that option because to me, the one most controllable expenses has been that maintenance side. And a lot of what I've been trying to aim at doing is really just trying to triage and figure out what can and should the tenant be responsible for. What's the lowest cost to fixing this? What is the lowest friction also for the tenant, right? tenants don't want friction. Tenants don't want to have to schedule around a subcontractor. They don't want to have to take
Right.
off of work to be there. They don't want to have to, you know, have their home open to a plumber at 6 or 7 p.m. Again, just trying to triage what's the issue. Can we figure out what the root cause is? Can we band-aid it? If yes, or rather if no, let's try to get to the root cause on all situations in the
Well,
most
and let's try and
cost-effective manner.
eliminate windshield time too, because sometimes you get in there, you diagnose it, then you got to go to Home Depot, and then you got to come back, and hopefully you got everything that you needed, but maybe you didn't. So that could be 3, 4 touches. And I think what his solution is designed for is basically kind of a more integrated feel for like, I think what it's doing is it's integrating like FaceTime, so you can actually see what's
Yep.
happening with actual maintenance tickets, so you can figure out what you need before you get there and not have to.
Does it incorporate some kind of LLM or ChatGPT type interface that helps to triage?
Great question. I don't know the answer to that.
No, and the reason I ask is, I would say for a good portion of our fixes and triages is it's something that's easily fixable by a well built out prompt in a ChatGPT describing the issue. I think one thing that could help improve that would be a little bit more input from the resident. Typically, when you get these maintenance requests or work orders, it's pretty scatterbrained, not really well thought out. And so that's where the touch point goes back and forth with the resident of, okay, well, how is this going? And then after that third or fourth, you get enough detail to where you can ask that GPT and it comes out with a robust solution. And that's where we've been, I want to say 80% or more, being able to push it back to the tenant, give them the frictionless way to fix it, giving us the much cheaper way of fixing it as well.
Yeah, more cost effective.
That's a much better way to put it.
So I guess, why did you decide to go into development, ground up construction versus, going deep in the value add space?
Sure. So I should clarify that I'm in the value add space right now. The development was the initial step prior
Right.
to the value add. So where value add played a role in our trajectory was we had done enough flips. I was at that point probably running 6 flips per year, and we were putting out some good capital. At that point, we had organically attracted a couple investors. This was still while I was working my W-2 job. And it was, putting a picture of me on construction site on the weekend of, hey, I'm fixing this up. And that got enough attention on social media for people to reach out and say, hey, I wish I could invest in real estate. I just don't know where to start and I don't have the time. Okay. You don't have the expertise, you don't have the time, but you have the money. And so at that point, it started incorporating 2, 3, 4 investors on a single deal. And at that point, this is back in 2020, around 2020, what ended up happening is you just didn't have enough solid deal flow for the volume of capital flow that we had built up. So next clear step in the construction stage is the ground up development. That let me bring on more individual investors at a time while still managing one single project.
I'm going through, it was an existing building, but it's basically all brand new except for the original bricks. And it's been quite an ordeal, quite an undertaking.
What's been the most challenging part of it?
When I was a wrestler growing up, and when my coach knew that we were going into a tough match, he'd be like, now this is a learning experience. And so I went into this knowing that it was going to be a learning experience. You're basically dealing with commercial code for new construction, even though it's a renovation.
Right.
We didn't even have stairs in the building when I bought it. So, framing, having to make sure that the framers are doing it correctly as per plan. And when they don't, how do you remedy that? Plumbing, making sure that the fixtures are put in the right place or the openings for the faucets. And then just trying to keep somebody on site all the time to just be continuously pushing the project forward. Like,
Yeah.
I've had a couple of months where, not necessarily at a stretch, but over the life of the project where just nothing has been happening. Cause it's like, you're trying to, okay, well, here's a major screw up that happened. How do I reconcile that? How do we fix it? And it's been like, I have partners in it. They're family, but it's just me trying to figure it out. And I like it, but it's been fun. It's intellectually challenging work.
Sure. Do you have a superintendent on it, or is that you, or what's the situation there?
I have a crew of Jose's. I have one main Jose. His name is Jose. And then I had at one time 4 guys on the job named Jose. My main Jose, he's the one kind of coordinating all the work and labor, but it's still up to me to do the ordering, procuring of materials, get it there, things like that. I wanted to take that responsibility for this first one, but as we progress in future deals, I'm going to put more responsibility on him. It's been a journey.
You're absolutely right. On our development side, I started off the first 2 projects, ground up development. I hired a fee builder and it went fine. No major hiccups, no major issues, obviously the typical delays. And after the second build, I decided I want to try my hand at one of these on a kind of a lower scale, lower risk way. So I built a backyard cottage effectively, a detached ADU. And here in Seattle, you can essentially parcel those off separately and sell them separately from the main home, which is a really great play for creating multiple exit strategies. And I successfully completed the construction on one of those. And what I loved about that is just being able to be very hands-on from the entitlements all the way to the sales and marketing of it, right? At that point, I'd probably flipped about 30 homes. So I knew everything after framing, right? I knew everything about, like, I got plenty of homes down to the studs, replaced roofs, did dormers, all that kind of good stuff. But I had never done new foundations, site plan, utilities, all that stuff. And that was, from my learning, was probably one of the more critical things to get correctly, because, in new construction, once you're up to framing, there's very little surprises that come up. There's very little unforeseen things. The only unforeseen thing is, the change orders of the owner.
Yeah. Like we had to put, and I didn't fully understand this, so this is on me. We had to put the drywall all the way up to the floor below to create a fire barrier. But I thought that, okay, it's framed, we can have all the other trades come in, when in fact, we should have done the drywall up to the floor almost as like a pre-step before all the mechanicals and everything else went in. That way they could cut through it or punch through it, whatever it was. What we ended up having to do was like essentially cut pieces around and fit it around and it was just a nightmare. For the most part, I've hired people that I can trust, good people, let them do their work. The plumber and the framer were the same contractor, and that was not the case. They had the plumbing below the floor joists.
Sure.
As a result, we had to end up putting in a completely different ceiling system that was part of the reason for cost overruns. It's things like that. Those are the learning experiences.
So where are you at now with it?
We're mudding and taping right now.
Nice. Sure.
And ordered cabinets, and they're going to come out. Well, I didn't order them. I picked the finishes. They're going to come out and do a final measure, and then we'll order them, and drawers or interior doors. So it's like we're on the home stretch. It's been a lot.
And I'm sure, as soon as it seems like once you get doors, cabs in, you still got that like 2-week black hole of punch list items that inevitably take longer than expected.
Everything does. Everything takes longer and costs more than you think it will.
Speaking of cost more, I didn't realize, so with commercial, most of the sheetrock there is going to be that smooth coat finish, really high end, kind of really nice level sheetrock. I didn't realize how dramatically expensive that type of finish is on the sheetrock relative to maybe like a light orange peel. When I started doing what I would say my highest high-end flip that I'm finishing up right now, it's, on a 2,000 square foot home, nothing extraordinary in terms of ceiling height. The difference was like between $15,000 and $22,000 for, that light orange peel to a high grade, low texture, no texture type sheetrock job. And I assume that's probably what you ended up having to do for your commercial space.
Well, they're all apartments, but we have to follow the commercial building code because the
Okay.
6 units is
So
more
yeah, okay. So
before.
you're probably just doing like a light orange peel or something like that, like light
Uh,
texture.
yeah, I think we're actually just gonna do we're gonna do a coat of primer and then 2 coats of paint at least, but we'll
Sure.
do a flat paint so that's easier to touch up.
Yeah.
It's been quite a journey.
How many
Uh,
how many units is that?
it's 6. It's 6
Okay.
one-bedroom apartments. Yeah, I'm meeting with the local business journal next week. They're gonna come out and do a story on it. So,
Holy smokes. That'll be fun.
yeah, that's exciting. Let's see. Well, let's kind of circle back. I don't have the challenges of rent control necessarily. Sometimes with development projects that we work on, you have to keep the rents at or below 80% AMI or
Yep.
60% AMI to be able to get the incentives. What has been your experience with the creeping in of rent control and other restrictions like that?
Good question. Washington State, very blue. Seattle, very blue. Politically leaning, that is. And what we find in Seattle obviously is kind of the hub of the most difficult rental restrictions. And given that Seattle is the largest city in the state tries to follow Seattle pretty closely. And so Seattle, we've been operating at some degree of rent control. Now, let's unpack what rent control looks like. Here in the city, it's, if you're going above 10% in a given year, 10% rent increases in a given year, you have to offer the tenants a relocation assistance. And, what does that really mean? To me, what that has meant is you build in your business plan to not require a 10% increase over a given year. Now, that precludes a little bit of the value add projects, right? Where you're going in and you're buying something that hasn't had rent increases for 4, 5, 6 years, and they're 20, 30% below market. And so, what do we do there? It's, we work in a couple different ways. Ideally, we're not evicting, we're not moving people out just to increase rent. And so we take it slow. We increase them to a reasonable amount below the rent increase requirement. And we do our best to improve common grounds, common spaces. So that way people see, okay, new management's coming in. We're getting some improvements, better landscaping, better lighting, better security. That way it makes those rent increases slightly easier to stomach. And so, again, it's all about building in that rent control or the lack of non-regulation, building it into the plan.
Well, and I think this is because we're going to chop this up into social media clips. So I think it's important to articulate why rent control is a bad thing because, on the face of it, it seems okay, let's legislate that rents can't go up. But if you think more deeply about it, housing is a business and housing is a right for people, right? Like people have the right to live somewhere. But if you cap the rents on somebody and say you can't raise the rent, even though the market would support it, what it does, especially if you do it on a market level basis, it incentivizes investment. And so you have these properties that end up accruing deferred maintenance, which can take the form of just rotting eaves on the exterior to, well, I'm not going to fix your toilet because I don't have any incentive to be able to do it. It's a dangerous and slippery slope. And it also, you have then tenants who start to play games of, oh, I can't leave this apartment because my rent is so low. So let me assign my lease. Let me sublet it essentially to somebody else and I'll take the margin instead of them.
So on the rent control side, it definitely restricts the desire for value add, small operators to come into a market, right? Because we see our cap, we see our upside capped to a certain degree. And so not only for the value add investors, but also for the developers, right? I mean, if the developers see that, hey, my yield is going to be capped for the next X amount of years, or if I have to put in a larger volume of affordable, specifically rent capped units, again, that is disincentivizing the developer to wanting to come in and make money, but then also provide ample supply. And we all know more supply. We see what's happened in Austin. We've seen what's happened in Denver. We've seen what's happened in a lot of these other secondary markets too, is this huge volume of supply has been what has caused rents to naturally go down. And so we open up the ability for supply to just come in and take hold of the market. Then we're going to see what rent control can't do, and it's decrease rent.
Right. Yeah. And I think the Sun Belt has been a victim of that as well. Like Charlotte, Atlanta, those are the two main cities within the Sun Belt, but you see that there as well. I'm an investor in a deal in the Carolinas, and they've all but paused distributions because there's too much supply coming online. And it's like, you should have figured that out. You should have saw that coming before you positioned this as a institutional type opportunity. So yeah, it's interesting to say the least, the market fundamentals and dynamics.
Yeah, no, it's certainly difficult, and especially when you tie in, some kind of rent control mechanic into the market on top of a difficult entitlement process, on top of limited supply of land, right? Like I'm again going in and defining what Seattle is. You're creating this perfect storm for housing affordability becoming a more pressing issue, which again just perpetuates the entire rent cap issue. And so you've got limited supply now because there's no real incentive for the developers. It makes investing in these markets challenging, but ultimately I'd say you figure it out, you build it into your plan, you build into your assumptions around it. And there's still certainly ways to make money both from appreciation and limited cash flow.
What is the planning, zoning, entitlement process like for you out in Seattle?
Yeah. So assuming you're not going to push the envelope and do any kind of upzone or spot rezone, which really doesn't happen in Seattle, for townhomes, like low-rise style housing, you're looking probably 12 months for the entitlements. You're not building anything above your floor area ratio. You're not doing any kind of lot coverage. I would say 12 months is what we're seeing right now. On the larger stuff, mid-rise apartment stuff, it's in the 20 to 30 month range. Again, that's not pushing the envelope. You're not requesting any kind of exemptions or anything like that. So
it's just moving it through the process.
Yeah. Yep. And a lot of it gets held up in design review, administrative review, city review. I think what the city council and the mayor are trying to do is eliminate some of the bureaucratic processes regarding the reviews and helping to streamline so that way. Because right now, much like some of the other cities in the country, it's, we're starting to see the taper off of supply. Seattle, certainly so. Later this year, we see that supply plummet. We've already seen rent growth back in action, which is great. And yet there's still no real clear sign that we're going to be seeing a ton of new development coming in. I think obviously in January this year, we had legislature reopen and they brought more rent control back to the market. And I think, again, that's going to continue to disincentivize a ton of new development.
That is baffling to me because it's hard enough to build. These politicians want more affordable housing and they try and legislate it in with rent control, but that is the exact opposite thing that they should be doing. They should be helping to facilitate development. In your opinion, why do you think it takes 12 to 24 months to be able to just get your plans approved? Assuming that you're hiring good architects and assuming that you're hiring professionally licensed architects and engineers to do the plans, right?
No, so you carve out, let's call it 3 months worth of architect, engineers, and consultants, right? That's probably the amount of time it takes to get a really well-designed product. So it's that 9 months of bureaucratic review that just holds up the process. And so, again, a couple of different things is it's just an inefficient process going from one review desk to another. They're sitting on it too long. City is always claims understaffed. And I think, this is to me a making for, I know there's several products out there around incorporating, some kind of AI into the permit process for the municipalities, being able to read read permit sets, make recommendations, and redlining them. I think that there's no reason why we shouldn't see broader adoption of a tool like that.
That's an interesting thought, is to create an AI enabled plan review solution. These plan reviewers and city officials, the czars in charge of planning, to do their job more efficiently.
It seems like the review process is literally just a 0, 1, 0, 1, right? Just a binary decision process. You've got a code book, you've got a rule book, you follow the rules. Rules are, generally speaking, can be read in zeros and ones, and you just have some kind of sophisticated machine learning set on top of that with very complicated business rules. And yeah, certainly should see some kind of AI enabled review process to expedite that 9 months. Maybe you're still going to need some human intervention, maybe, but the government will figure out a way to always incorporate additional human interface. And so I think even if you take that 9 months and cut it down in half, certainly is not out of the realm of reasonable.
I think we're probably, if LA can get its act together, which it's going to have to with
Yep.
the recovery from the fires, my guess is that they're going to have to, if they're going to have an efficient rebuilding process that doesn't take 30 years, they're
Yeah.
going to have to enact some of these tools, things like that. So it'll be interesting to see what comes out of that, and if they're willing to explore new technology solutions.
Well, that's only one prong of the issue. The obviously the secondary issue is the contractor availability and the fee capping for contractors, right? Capping contractor fees to a certain degree, and I think it's something like you can't go above 3 or 4%, something ridiculous like that, where it's caps the fees that those service providers are going to be able to offer. Again, that's going to disincentivize very high qualified contractors that live in Idaho or wherever. Say, hey, I want to go make a lot of money. Let's go to SoCal for the next 3 years and rebuild.
Right.
But if their fees are capped, there's no incentive for them to do that, causing a longer backlog of construction. But to your point, fix one issue at a time. And if you can get some kind of AI enabled plan review set, yeah, I would love to see that. I think any area on the West Coast or anywhere that has long permit timelines could only stand to benefit from it.
Like if I were to go for a commercial CRA, tax abatement here in Cincinnati, it's 18 months from the time you submit your application until final approval. And that doesn't even include, hopefully you're running your plans through the system at the same time, but it's just baffling. It doesn't make any sense. It should be like a programmatic thing. Anyway. So,
yeah, I mean, it's a web form, right? It should just be a web form.
It surprises me so much that so many businesses out there aren't using web forms to be able to collect data. They're like, here, fill in this PDF. It's like, well, it's not the most efficient way to do it. And it's not that hard to make a Google form or a Microsoft form. Whatever.
My early days of cold calling was the dinosaur version of you get somebody on the line, you write an email or a Word doc, and you just follow up on that. Now it's have a CRM, pipeline CRM, and my cold callers have a web form that basically they just run down the script of questions, they input it, and it automatically comes over to my Podio. I get emailed, and I call the guys.
That's awesome.
It's phenomenal.
That's really cool. I like
yeah. And now I think our SEC attorneys have a web form like that for completing the 506B and C type documents and creating the operating agreement, the PPM, that stuff. So yeah, similar.
As they should. Yeah.
Yeah, absolutely.
I just signed up to put some money in a deal with one of our clients, and it was through Appfolio, but it was just like, here, enter your information, and there it is. So
nice.
It's pretty simple.
No, that's awesome. Yeah, I think that's absolutely the way. I mean, that's how creating a frictionless environment for your clients, whether they're investors, whether they're tenants, whether they're homeowners, I think is ultimately the way as business owners is going to continue to be on the forefront in winning business and continue getting repeat business.
Mm-hmm. So you touched on it a little bit earlier with the balancing of cash flow versus appreciation. I imagine that you're probably in a higher appreciation market than a cash flow market. Am I correct in that assumption?
For sure in Seattle, Central and Eastern Washington, no. Central and Eastern Washington are very cash flow heavy markets. Their price per unit, their purchase price relative to their rent is strong. Obviously, their appreciation over the next 5 years is going to be nominal, right? Let's call it 60. I think Spokane Valley saw like a 16% average annual increase over the last 10 years. That number might be off. It might be 8. But anyway, Seattle, obviously, very, very strong appreciation market. The deals that I own here, we still cash flow. Let's put some numbers on this: 5%, 5.5% cash on cash return for my Seattle deals. Central Washington is 8 to 10%. Eastern Washington is 10 to 12. So still solid. I would say absolutely solid. Good diversity too.
How are taxes handled in Washington?
Which type property? We have property taxes
tax.
and then excise taxes. So excise is when we sell, there's a tiered approach on how much you pay, usually anywhere from 2 to 4% excise tax, depending on the size of the property. Property taxes are, I would say, expensive. They're not costly.
That's good. I'm based in Cincinnati, and the biggest bogey on any deal are property taxes. And how are you going to look at reassessing them? And it's even a gradient based on where you're at in the state, because if you're in Northeast Ohio in Cuyahoga County, which is where Cleveland's at, they're going to hit you with a full 100% reassessment the next day that you close.
Oh, really?
Whereas in Columbus, your 80, 85% reassessment is what you underwrite at.
Sure.
Cincinnati, it's about 80% reassessment. So, but I mean, those tax numbers are sometimes that's the biggest line item when we're doing our underwriting. It's not.
No, and that's, there's two things that I've loved about investing in Washington. It's the low relative taxes and low relative insurance. I feel like over the last 3 years, Sunbelt and other parts of the states have gotten really hit specifically with insurance. And then obviously some states are just historically known for high property taxes, like Texas. But, I think it seems like I feel like we're pretty insulated to that exposure. Here in Washington, insurance anywhere from, I think, $350 a unit is what we're clipping right now.
Insurance at $350 a unit?
Yeah.
That's great.
It's phenomenal.
When I first got started, it was $250 a unit, and that was like gospel. And it has crept up over the past couple of years where it's like 500, 700. I don't know if we've seen $1,000 a unit, but
Sure.
We've seen 900, 9 and change per unit.
That's awful.
And I think that that's partially offsetting the losses in, say, Florida and the Gulf, Gulf of America now.
Like that.
Insurance is a big bogey these days.
So I just had to do a quick calculation. The property that we close in 2 weeks is $187 per unit. It is newly built in 2023, but again, $187 per unit on that. And then our 100-year-old apartments, those are $600 per unit.
Wow.
And here's the crazy thing to me, according to FEMA's national ranking of natural disasters that the insurance agents will look at, it ranks Washington. I don't know where in the top 10 it was, but it fell in the top 10 of probable property damages due to natural disasters, which blew me out of the water because I was like, excluding earthquakes, the hell, what do we get? What's our issue? And so landslides, wildfires, and avalanches. I would say the large portion of those only impact very rural properties, none of which we buy in.
Yeah, that's strange. Back to property taxes. There's a fun game that they play in Texas, and I don't know what it's called, but apparently you can. So if you're buying in, say, like Dallas or something, or Houston or Austin, Texas is such a big state where you can essentially, a friend of mine was telling me about this, and I'm not going to get all the facts right, so don't hold me to it, but you can essentially sell your property to, I think it's some not-for-profit in a small rural county, and they'll cap your taxes at like some marginal amount, and you pay somebody in that, some attorney, a fee to be able to do this, and you're able to keep your taxes low for like, I think it's 99 years. It's insane. It's a workaround. I don't know how much longer it's going to be in effect for, but
So now the secret's out. Yeah, now you just ruined their P&L for the next 6 years.
that's all right. I'm not in Texas. Yeah, so be it. It's the game. And I think, with technology, something's going to have to happen. And I think this isn't a political show, but I think the things that Elon is doing with Doge, finding all this inefficiency in government, is going to trickle down into, state governments and then county and even municipalities.
Yep.
At least I certainly hope so.
Absolutely.
So
How do you, so I've read a couple different things. One in particular that I obviously like as being a commercial owner is the impact of real cuts on the federal level relative to the outlook of the 10-year treasury, right? So 10-year treasury obviously looks at what's the probability of inflation, adjusting your returns for that probability of inflation and how much it's going to be. The idea that if we're cutting spending by $2 trillion per year relative to the work that they're doing, that brings down the prospect of high inflation, which, if again those cuts become real, could dramatically impact 10-year inflation, which would obviously drag down yields on the 10-year treasury, which we all want to sing songs about.
yeah, I haven't dug into that, but I would agree with that sentiment. If we're reducing what the federal government is spending, which is a major driver of inflation, that is going to have a positive impact or negative impact on what the 10-year is demanded for returns. And if the benchmark is the 10-year treasury and, Fannie Mae and Freddie Mac build their loans off of a spread from the 10-year treasury, and it goes, I think today I saw it was at like 4.6 when I looked at it. If it goes to say 4% and you have a 150 basis point spread, well, that means you can take even leverage at a 5.5 cap, which that might be the trigger that we need to open the capital markets back up.
Yep.
The investment sale market back up and start getting some more liquidity pumping through the system. Yeah, I mean, the days of 2.5% interest, they were not real to begin with, and they're not coming back. So you can't necessarily factor in my markets in the Midwest on 4.5 cap deals anymore, unless there's some extenuating circumstances where, hey, it's there's a great value add opportunity, or it's in lease up, or whatever it is. And that's what I think a lot of investors are still trying to reconcile, because oftentimes it's like, what's the exit cap going to be on a deal? And they all, when rates are low, they have a magic crystal ball that says, well, I'm going to buy it at a 4.25 cap, and I'll be able to sell it at a 4.75 cap. And it's like, well, we're not there anymore 3 years later. And so now they're like, well, it's going to be a 7 cap or maybe even higher. Like, nobody knows. That's the real answer. And anybody that tells you that they do is lying.
I had this conversation last night with one of our investors on the deal that we closed, and it's, what's the probability of this thing is we're going to be able to hit this refinance? And first off, I really don't. I can't tell you with certainty that we're going to hit this. I can tell you where we got our assumptions, and our assumptions are from the Federal Reserve and their forecast of the 10-year treasury, and then building in what the typical spread is from Fannie Mae, Freddie Mac, and what the debt service coverage ratio and what our NOI projections are going to be. I can tell you all that. And if we hit those assumptions, those 3 major assumptions, NOI, debt service coverage ratio requirements, and projected interest rates, then 100% we'll hit it.
But it's that
last moving target. You got 3 moving targets to deal with, and that's just at the high level.
Well, I think there's something that both of us share is that we both get up early. We both get up early and work out every day, or just about every day. Like, how have you, why, first of all, have you incorporated, a fitness routine into what you do? And, how do you think that has helped you?
Yeah. So discipline is, to answer it backwards, discipline is where I think it's helped me a lot. It's, going and running when it's cold out, going and running when it's raining out will equate to going and underwriting a deal when I'm just too damn tired, or making sure that we're holding it to our investor reporting requirements, even though we just talked about it a couple days ago with everybody. No, we still report on it like clockwork. And so again, just keeping to a discipline, I think absolutely has been really, to me, the most clearly aligned benefit that regular fitness has had on my business. Obviously, the other indirect benefits, or maybe direct benefits, of I'm still sane, I am healthy, so I can last all day, as opposed to, maybe eating unhealthy, not being very active. You get the 2 p.m. slog, whatever it happens to be, always sharp, always mentally acute, are the two areas that I would say running and regular fitness has driven and been a benefit to the business.
Is running your primary outlet?
Yeah, running is the primary outlet. We talked about it a little while ago, but CrossFit used to be it for me. I loved it. It was fun, but I had nearly an injury where we were just blasting our shoulders, doing shoulder presses for the workout, basically going reverse pyramid until exhaustion. And then the workout of the day was handstand push-ups. And so I was in the middle of doing the handstand push-ups, just exhausted. And I'm like, if I slip, I'm going to fall on my head and maybe break my neck. Is
Yeah.
this worth it? And so that's where it was kind of this, what, maybe I should try something different.
Yeah.
But yeah, no, running is great.
I think, whatever your desired exercise outlet is, I've been battling a back injury. That's my own doing. But, I still get up and I still go through, I may have dialed back my weights a lot, which
Sure.
I have, but I think still for me, it's getting up at, either 4:30 or 5 o'clock, on what time the class is, and doing it when you don't want to. What I've noticed, sometimes I ended up taking a nap in the middle of the day today. We were on this big conference call and it was very boring. And I was like, I need to take a break for a minute. You still have those lows through the day, but I notice that if I don't work out, I am off. I feel irritable, might be the right word. I just feel there's a definite difference. And I've always tried to keep that routine.
No, you're absolutely, I think it is irritability. And I don't know about you, but for me, it's shown with my family. Is like, my wife can absolutely tell, hey, you haven't had a run. Thank God that hasn't happened in a long time. But it's, head clearing, meditative, and just really, again, to me, it is meditative, right? Especially trail running, which is what I do.
Oh, that's cool.
Yeah. And so it's like you're running on really uneven terrain. It's dark most of the times for me, at least right now in the winter. You got tree roots, you've got rocks, you've got slippery floor, you got ice right now. And so it's, you have no space to think about work. You have no space to think about family. You have no space to think about anything else besides, where's my next foot landing? Where's my next foot landing?
Yeah.
And so that process is just hyper meditative.
Yeah, I agree. Yeah.
I'll have to send you a photo of it, but what's the word I'm looking for? My alarm, it's basically a bet against myself to never hit the snooze button on my iPhone. And it's basically what my alarm is called. So that way you hit one of the buttons to snooze it. But if you hit both buttons, you accidentally take a screenshot of the alarm name, and it's a very punishing alarm name. So that will show up in my photos later that morning. I'll look at it.
Yeah, I did
Yep.
it.
Yep.
That's good.
Luckily, those don't happen very much anymore.
Yeah. Well, Karl, this has been a lot of fun, man. I appreciate you carving out some time for me. And, if somebody's interested in investing with you, or they have a deal that they think might be a good fit for you, what's the best way to get in touch?
Yeah. 2 ways, LinkedIn. I love LinkedIn. It's a great place that I network primarily through on social media. So my name, Karl Krakoff. Alternatively, our website, gold-mf.com. It stands for Gold Multifamily, alternative to the other idea.
That's good. Well, cool, man. Well, thank you so much. And I hope you have a great rest of your day.